Hi, Vanessa Golightly from Ray White Metro, and welcome to the Ray White property panel. I'm here today with Elizabeth Goulding from Ray White McPherson Property Management and Simon Maule from Low Market. And we're just going to do a quick summary on the property market year to date and where we all see the rest of 2016 heading for our respective parts of the industry. Elizabeth, first half of 2016 for property management and rentals. And how would you summarise the year to date?
It's been pretty busy first half of the year. For us, there's huge changes, compliance, health and safety regulations. We've got smoke alarms, insulation. So for our owners, there's a lot to get their head around, and we're working with them to make sure that we've got policies and procedures in place and that they're covered.
Yeah.
So that's a really big thing. Market-wise, just big differences from where we were, say, this time last year, definitely. There's a lot more property, particularly in our Christchurch market. As rebuilds are finished, new stock is built, so that supply. There's also a lot more investors that have entered into the market, so the net effect of that is supply has increased, rents have dropped significantly.
Sure.
So our returns for our investors are definitely not as strong as perhaps they were 12 months ago. A reasonable return we would probably see is 5-6% on the current market.
Yeah.
And that's why probably a lot of people are getting in, that sort of senior market who perhaps have money in the bank, looking for a better return.
I suppose it makes sense. So predictable first half of the year or unexpected?
No, we sort of saw it happening in last year, but it's had greater impact now. We're getting into the rent reviews, and for those people who had leases 12 months ago, some significant reduction in their yields.
Sure.
But if they're looking long-term wise, they're still probably getting good returns and they're keeping good tenants as they're adjusted.
Good.
Days on market have certainly increased though, so we're trying to educate our new owners and things coming in, or those who perhaps had that expectation of continued yield. It's a process.
Sure.
That we have to keep working through.
Interesting, yeah. Lots of changes.
Absolutely. Look, it's busy. Lots of tenants out there looking, but they have the luxury of choice. So from our point of view, we don't perhaps have the luxury of having the best tenants that we always want, so we're having to work through and make sure our policies are ensuring that we could do have the best tenants for our owners going into.
Thanks, Elizabeth. So, Simon, 2016, halfway through the year, how have things been in respect to mortgage and lending?
Look, it's been a very busy start to the year again. Certainly first-time buyers are out in force, and we're seeing that the low interest rates that people are comparing maybe what they've been paying in rent, considering I can now get a home loan at maybe 4.25%. They're weighing that up between paying that rent ongoing and maybe having a similar or slightly higher payment for a home loan, where they can reside in their own home without any restrictions. Yeah. And we're seeing a lot of first home buyers getting in. KiwiSaver withdrawals have gone through the roof, so a lot of the banks are reporting that their KiwiSaver withdrawals are at full-time records. That's because we're seeing those entry-level buyers getting into the market. We're also seeing interest rates drop this year already, and there's certainly signs that rates may ease further during the course of this year. Wow. And so, look, it's good conditions. Christchurch market being relatively flat is also meaning that buyers are perceiving that they're not probably paying too much to get in at the moment, which is a good thing. It keeps the activity up. Investors, just touching on what Elizabeth was saying, I totally agree. Those investors, mature investors with a few $100,000 maybe in the bank, earning very little interest at the moment, and now looking at better ways to make money, and buying property, having a tenant, and looking at capital gain long term is now becoming a strategy for them as well. So there's that wave coming through.
Okay. Thanks, Simon.
Vanessa, obviously Elizabeth and I have given you our thoughts on the first 6 months. Property-wise, we're all interconnected. What's happening with sales?
Sure. This year is, as expected, has eased off. There has been an increase in stock, which therefore has seen a slight ease in prices. But we, with the amount of properties being rebuilt, it wasn't something that we hadn't anticipated happening. In relation to statistics, the sales volume was up 23% from this time last year, which again reflects the amount of properties being reviewed and back on the market. Prices have remained steady, however, similar to property management and finance as well. Good properties in good areas, good school zones, locations close to malls, shopping centres, things like that are still always selling well. People aren't paying over the top prices as they were a couple of years ago. And anything that is slightly overpriced, the market is picking up on, as you said, Simon. But yeah, hey, look, well presented properties in good areas and good locations with draw cards are still, getting good market activity. Days on market has come back slightly. I think it was 28, now it's 32. But again, this just reflects the fact that there is more choice out there. People are perhaps taking a little bit longer to make decisions. But yeah, I mean, it's been a steady market, but an easing market as well.
Property prices increased by about 2% across Christchurch over the last year, isn't it?
Yeah, it's the Real Estate Institute, when they released their media release last month, said the same thing. Overall trend is easing, but we have had a slight increase as well in price, but nothing to report home about.
So it shows that those owners are looking for capital gains. And, So,
rest of 2016, how do you see things going in your respective parts of the industry, property management and mortgage and lending?
Look, more of the same probably. As Simon said, money is cheap. We've got investors existing, and we know there are a lot of new investors out there looking that will increase. Do we think that prices will drop significantly more? Probably not. We're probably easing to a point in the market where it's reasonable, but I guess again, there's that supply and demand. Choice will determine. Owners, I think we're going to have to get clever or creative perhaps about leasing structures. There's letting fees and things. There has to be some incentive, to maybe move things along and reduce those days on market. Trying to make your property slightly different while it's good value. You need incentives to get those tenants in there at the end of the day. If there is going to be so much stock. So these are things that we'll need to be looking at and thinking about. But, just busy compliance.
Yeah.
Huge for us. And of course the meth testing is just something else, again, that we're looking at for our owners and their ongoing risk management.
Yeah. Simon?
Look, I think there's still a fair bit of activity on the lending side for the year, particularly around legislation. The government and Reserve Bank are looking at ways to try and cool the market. Outside of Christchurch, we're talking here, as you said, Christchurch market 2% rise in this last 12 months, very moderate and a good market, I think, for most people. Most people feel comfortable in that market. However, you compare that to Auckland, Hamilton, Tauranga, those parts, Wellington now, getting very, very double-digit increases in house prices over a 12-month period. The government's looking at ways of cooling that. Now, there's possibly a debt-to-income ratio coming in, some talk of maybe 4.5 times the gross income of the family, earning 100,000, maybe 400 and 450 is the most you can borrow. Now, at the moment, the banks are lending much more than that to those people. That's one mechanism. Some bank economists are saying they don't like that idea or don't think it's the best way because it penalises first-home buyers. Maybe some alternatives suggested are Auckland investors 50% equity to get into an Auckland investment, maybe 30% equity outside of Auckland. So there's a bit of tinkering to go on. I think it's going to happen this year some stage to try and quieten some of these markets. Hopefully it's regionally based, not New Zealand based, because I think Christchurch is quite settled. And interest rates, probably likely to see some further easing in interest rates. However, the banks are also citing funding cost pressure. In other words, they're saying, hey, we're discounting rates, we're providing incentives to people. We're having to get our money offshore in many cases, and that's costing us more. So our little margins can leave sometimes, but it is apparently easing. And if the US starts putting up its interest rates, it may have an impact on our rates here. And so there's a couple of uncertainties. But low rates for longer, inflation's low. I think it's a really good time to borrow money still.
Sure.
Housing market. What's going on with that?
Housing market. I anticipate that, as you mentioned, people have become quite comfortable, I think, this year, that nothing dramatic's going to happen either way, as in huge increases or huge decreases. And I think people have a bit more confidence continuing on, both selling and buying. Seasonally, we always have the spring market. Everyone in Christchurch seems to wait for the magical spring market, but what that does is, is an influx of stock on the market, so sometimes it can be a bit more wiser to get on sooner rather than later, but I think the rest of this year will go incredibly quickly in relation to sales in the market. We've essentially got 2 months left of winter, and then we'll be heading back into what is the housing market. But yeah, if lending remains good and interest rates stay the same, I think that will have a good flow-on effect for sales for the rest of the year, and should be interesting.
What's the preferred strategy these days? I mean, Christchurch seems to have taken on the option, so is it going to be the Saturday sport ongoing, or?
Yeah, I mean, it's I tend to offer choice. I mean, I'll do auctions, tenders, deadline sales, all prices, and it comes down to type of property. For me, it's about focusing on the buyer type, and I do know first-time buyers generally would prefer not an auction, but if the client's circumstances mean they need a good, quick cash and conditional sale, we would go down that strategy too. But again, same with rentals. I think it's about being a bit more clever about the fact that it does market out a little bit longer. There's more competition because there's more properties, and it's making sure that you probably have a bit more of a think about the strategy of how you're going to sell your property moving forward, and your buyer type is the most important thing to work backwards from. Not necessarily what your agent thinks best, but figure out first who's the most likely person who wants to buy your property, and then work out the plan of attack from there. So.
Yeah, it's interesting, isn't it?
Yeah. Anyway, okay, well, thanks, guys. I appreciate your update, and hopefully that's been of interest to some of you out there who are wondering what's happening with the property market.